Hello, traders. It's 8:04 a.m. Chicago time on Wednesday. Excuse me one second. On Wednesday, the 10th of April 2019, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at an overview of what we've got. My quote board disappeared. Uh, a moderate allocation to risk this morning. It's a little bit of a mixed bag, but the DAX is up 51 and a half points. The cable's up 34 pips, trading at 131.21. The Euro stocks are up as well. Crude oil leading the pack, up 36 cents at 64.33 on the May contract. That's the K9 contract, followed by the S&P, Nasdaq, and the Russell. The laggard today is the VIX futures down 23 cents or 1.5%. The Euro FX down 190 pips, and gold down $1.70, trading at 1306.80. So that's where we stand this morning. Again, a slight allocation to risk as we come into today's session. Looking ahead, we did get some numbers this morning, and we got the ECB announcement. The ECB came out at 6:45 Central Time, leaving the 7-day main refi rate unchanged at 0% as expected, maintains forward guidance on rates. We did get the CPI release here in the US. Expected 0.4, got 0.4. Ex food expected 0.2, got 0.1 month on month. Draghi has been speaking, and I think continues to speak. Reiterates that forward guidance provides no details on. He reiterates forward guidance that interest rates to remain at their present level at least through end of 2019 and for as long as necessary to ensure sustained convergence of inflation towards target. It's interesting. I looked at the yield curve yesterday on the euro, and it's most of it is underwater. It's I think it only gets positive around the 10-year mark. I'll show you that. You can actually pull this information from the ECB website. Here it is. Just out of interest, you could see that this is the zero line right here, and you could see that the yield curve crosses it. Oop, yellow is not a good color for this. The yield curve crosses it right around the 10-year maturity mark before it gets positive. So basically, if you're holding anything short term, you're paying it's disincentivizing people to save, and that's the goal here. So really interesting, but there's still commentary coming out from the ECB on that. As far as what's on the calendar going forward, we did get some high-tiered numbers this morning, also out of Great Britain. The balance of trade came out. And as I said, the CPI came out. That's the inflation rate. We do get the FOMC minutes at 1 Central, 2 Eastern, and we get the China inflation rate year on year at 8:30 Central p.m., 9:30 Eastern. We do expect Fed Chair Powell to speak at some point today. Let's take a look at the review segment. This is what we expected yesterday. What I was looking for was for a market that is likely to push higher. The opening was expected around 28.90 or so. I don't remember where it opened, somewhere around there, 28.80 something. But I expected a push up into the low volume node at 28.94, and then I expected a push down below the prior day's range down to 28.78.75. If you recall, this is the low that's forecast as the primary or most likely scenario or the trade of the day. Expected to turn up in here at the low volume node, if not the point of control, likely to close the door on buyers. and push us down. So overall, in the morning, I was looking for a push down below the range, again, to 28.7875, and then a pop back into the range into the close. Here's what we got. Let's clean this chart up a little bit. Bellissimo. All right. So this is what we got. We opened up, had a small push up, and then we pushed right below the prior day's range. This is the prior low right here at 84 and a quarter. Pushed below the prior low, and then it just made its way up, almost got the point of control. And then this is really where scenario one starts to kick in, right? So scenario one was really looking for chop, 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 push up, and then get down into where 28 28.7875 and 28.7875. It got to 28.77 and a quarter. Would not have triggered a stop there, and then we pushed right back up. We didn't come back into the range. The range is a little bit higher, 28.84 and a quarter. But it did leave us with this almost, for those of you who are pattern aficionados. It left us with an inverted head and shoulder kind of formation here, a skewed inverted head and shoulder with a target of approximately the prior day's high. And that's essentially what we got given the overnight high here. The overnight high took out yesterday's high by one tick at 28.91 and a quarter. Right there. So this is the scenario one did play out. It did take it a while to develop. It did push to the point of control as expected. We did open below, well below um, uh, where we were expected. I mean, like I said, the point of control is always expected to interfere with price movement. Why? Because the point of control generally describes acceptance. So we're expecting two-way trade in that area when we go in there. So it did its job there. We didn't quite get to 29.94. We're likely to get there today. And that's the recap of yesterday. Yesterday, by the way, had pretty good volume. The prior days did not. So if you look at the volume yesterday, you can find that on this chart here. Let's clean this up. Hello. Bonjour. These are your volumes right here. You can see 810,000, 912,000. These are all pit volumes, 887, right? And then we got 1.1 million. This product, the S&P, on a regular day, which yesterday was, um, uh, generates about 1.1 million contracts. So these last days here, these last few days really were pretty low volume. Not a fun trade really, especially Friday. Wow, Friday was just awful after the non-farm payrolls, and uh, and uh, and then volume came in a little bit yesterday. It was this move down was fairly meaningful. It seemed to really push. And I did, I was targeting 28 to 28, 78, 75, but I was starting to look below as it was moving. I was starting to think, 72, 72 half, maybe at hand. Here's the overnight. Here's the overnight. The overnight has traded really pretty decent. The range has been pretty decent. We've been getting almost exactly 10 points, 10 points of range per night. And last night it pushed that a little bit, pushed 13 points. We have a P-shaped, almost P-shaped looking profile where we tested down. This looks to me like an excess low below yesterday's IB. This looked to me like an excess low. By the way, yesterday we had a neutral normal day where we broke the high in here, broke it again. This looked like a continuation trade, um, and then fell below the IB low to finish somewhere in the middle, right on top of the point of control. Just an interesting day yesterday. We do have a good value area for yesterday, and we just fell right out of it. Dropped below the IB, tested into 28.78. Well, hang on, 28.78. Yeah, tested below to 28.78, and this thing's been on an uptrend since then with a small pullback at the number right here. But this looks set to resume higher prices. The point of control is higher than the mid, higher than VWAP. Prices are above or squished between the point of control and the mid slash VWAP, and we are trading higher. Most of the inventory overnight is long in price and in delta, so there's a slight positive long inventory overnight, which might balance out at the open. Let's take a look at what we've got for today. So let's set this chart up here. Ba-ba-ba-bum. There we go. All right, so why is there a gap up here? 1 second. Me no likey gappy. There we go. So what are we looking at today? Lock and load here. We're looking at a market that's trading on the edge of value, so we're likely to open in value, in range. We're likely to revert back. I'm looking for a push down similar to what we've seen over the last couple of days. The target for that is likely to be around 28.84 and a quarter. That kind of head and shoulders neckline area, the double top. Hang on, you'll see it better here. You'll see it better like this, like that, like this setup. There, this spot right here is expected to provide a little wee bit of support, 28.84. Okay, so this morning, again, likely to drift down 28.84, consolidate here, attempt to poke through, looking for an impulse up, looking for the overnight point of control to be tagged and tangled with, and then I'm looking for this to start resuming. You know, this looked like yesterday looked like the beginning of one time framing down on daily, and I'm expecting that to come to an end today, and then to finish somewhere in the 28.91.90 area on the close today for about 10 points of range or so, 10 to 12 points of range. That's the primary scenario. The better scenario for trading, which is less likely, is a push up right off the get-go. That impulse is down, gets tangled up in that 84 and the point of control 82.75, 83, and then starts to drift down through to yesterday's low and testing this overnight low to start moving towards 28 72.50. I'm not seeing the scenario playing out very well, but that is the next most likely scenario to come out of today. In either case, remember, we're working with a balanced profile. It is Wednesday, it's not Monday. We do expect some range, and it is likely to be to the top side. So I'm going to be watching very carefully the pullbacks towards the point of control, any responsive selling into the point of control into the 84, 83 area. I'm going to be watching the order flow very, very carefully and looking to initiate in this area right in here, and looking for the rotation up into the next stock zone and into the high for a break above the high. A break above the high is likely to give us a small burst into 94. Remember 94 from back here? That would be our targeted top. Okay? So that's how things are shaping up. Again, without risk, you're just a gambler. So just make sure that whatever you do, that you're taking the best possible trade at the lowest possible cost. And at the lowest possible cost does not mean keep your stop at 2 ticks. It just means that you stick with whatever is reasonable for that trade and not give it more. Okay. So we have to pay up to see the next card, just like in poker. We have to pay up to spin the wheel, and let's only pay up when we think the probabilities are stacking on our side. Let the market set up. It is advisable for anybody who's learning or is having a tough time, um, or is having a tough time, to just let the market set up for the first 20 minutes. It's smart to do that. Jumping in at the opening range is not advisable. It's a great way to get chopped up. You can do that eventually, but at first it's best to let the market set up. And the question you want to ask is who's in control, who's likely to be in control, and which side has the ball, which side can carry the ball farther, uh, and trade from that side. That's the goal. Good luck.